Well, good evening, everybody, and welcome back to Long Dong Personal Truck Stop. We got an exciting video today where we're going to cover the earnings of three very large and important companies in the United States of America. Those companies being Apple, Amazon, and Mastercard, because there is nothing more important than analyzing the earnings of the largest holdings in every major index. So we're going to start off with the most exciting one first. Amazon. Have you ever heard of Amazon before? I have. It's a company that does packages. That's all they do, right? Okay. So we got Amazon Incorporated down 3.23% on the day, up almost 14% in the aftermarket. Oh my God. Are we getting a vertical line? Am I getting to sniff a vertical line here? So I think this is all-time highs for Amazon. Am I crazy? Yes. So if the price action in the aftermarket stays the same, we actually have all-time highs. Now, Amazon's been kind of a slug, okay? Year to date, it's up 1%. On the 5 years, it's actually, if you bought Amazon exactly 5 years ago, you massively underperformed the index, okay? But it's a great company, but sometimes that happens. And it looks like they're kind of catching up a little bit. So let's dive right into the earnings. Amazon announces third quarter results. Amazon.com announced their financial results for the third quarter ended September 30th, 2025. That was a month ago. Net sales increased 13%. That's pretty solid growth, okay? For a large company. I mean, Amazon is like a titan. Amazon's like a forever company. If you were to go to an island, a desert island, and you had to buy one or two stocks and just not see them for 20 years, I'd probably do like Amazon and Walmart. Something like that. Okay, so revenue's up 13%. And excluding a favorable impact from year-over-year changes in foreign exchange rates, net sales increased 12%. Okay, so they got a little boost from foreign exchange rates. The dollar's been selling off, but that kind of boosts international revenues. So North America segment increased 11%. To 106 billion of revenue. International segment sales increased 14%. That's very solid. Or increased 10%, excluding changes in foreign exchange rates. Yes, that matters. Okay. So international revenue was 40 billion. And then AWS sales increased 20%. Pretty good. To 33 billion. So AWS, the revenues, it's small and it's cute compared to the other two, but it brings in a lot of profits. You'll see. Operating income was 17.4 billion, compared with 17.4 billion in the third quarter of 2024. So operating income is actually flat. Let's go look at their history of operating income. Year over year, it's flat, but that can always change. As long as you're growing revenues, then you start tightening up expenses in the future, you're good to go. So you could see that their operating income basically exploded after the pandemic, and especially after the recession. They've been going absolutely vertical. So their operating income's kind of in line, nothing spectacular year over year, but still pretty solid profits. Let's see why. Third quarter operating income includes two special charges. Oh, $2.5 billion related to a legal settlement with the FTC. And $1.8 billion in estimated severance costs related to planned role eliminations. Just fire everybody, bro. We don't need humans. Without these charges, operating income would have been $21.7 billion, which I think is probably an all-time high, right? Yeah, their last highest operating income was $21.2 billion, but that was in the fourth quarter of 2024. And I'm sure it's going to go ballistic next quarter, too, with the holiday seasons. The North America segment operating income was $4.8 billion. Okay. Without the charges, it would have been $7.3 billion. International operating income was $1.2 billion. So actually a little bit of a decline from year over year. The results also include estimated severance costs, so that kind of weighed on the operating income. AWS operating income $11.4 billion. So look at that. North America segment $4.8 billion. International $1.2 billion. AWS $11 billion. Okay. More than half of their operating income came from AWS. That's the big daddy. And that grew revenues 20% year over year. Net income increased to $21.2 billion, or 1.95 per diluted share compared to 15.3 billion. Okay. Third quarter net income includes pre-tax gains of 9.5 billion included in non-operating income from our investments in Anthropic PBC. Wow. Okay, well, thank you, Anthropic. Operating cash flow increased 16% to 130 billion. That's very solid. And free cash flow decreased to 14.8 billion, driven by year-over-year increase of 50.9 billion in purchases of property, plant, and equipment. Like, how much are they going to, like, when are they going to ever stop investing all this? They invest insane amounts of money. It just never ends. We continue to see strong momentum and growth as AI drives meaningful improvements in every corner. Oh, I'm sure it's the AI, bro. Your chat bot maybe buy something else. AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20%. We continue to see strong demand in AI and core infrastructure. We've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. In stores, we continue to realize the benefits, innovating in our fulfillment network. And we're on track to deliver to Prime members at the fastest speeds ever again this year. Okay? Doing pretty good. So they have some highlights here. I mean, you can read all these on your own, but basically Amazon does like a trillion different things. Like, it's, if you're able to track everything they're doing, you're kind of a genius. But pretty good quarter overall. Nothing to shake a stick at. Fourth quarter guidance. Net sales are expected to be between 206 billion to 213 billion, or to grow between 10 to 13%. Still pretty solid growth. This guidance anticipates a favorable impact of 190 basis points from foreign exchange rates. Well, you can't predict that, but good luck. Operating income is expected to be between 21 to 26 billion. That's a pretty long range. That's a broad range of guidance right there. Between 21 to 26 billion. Compare with 21. Okay, so they could have a slight decrease in operating income, or they could have a massive increase. All right. Pretty good. Okay, this is just a summary of all their... This is their income statement. They have like a disaggregated... Here it is. Let's see. I'm trying to see what, like, they had... It shows their different segments and how fast they've grown revenue. All right. Online store revenues up 10% year over year. Physical stores up 7%. Third-party seller services 12%. Advertising 24%. Subscription services 11%. And AWS 20%. And other 8%. So pretty good overall. Okay. They actually added some employees. 2% year over year. But I also heard they just fired some people too. Okay. I heard it wasn't a bunch of middle managers. So anyway, solid growth, solid profits. AWS is cooking. Everything looking pretty good for Amazon, my schlamazon. Got really nothing to say about it. I mean, it's one of the largest stocks by market cap in the world. Wow. Okay, that's Amazon. Next, we're going to cover Apple, my crapple. Apple reports fourth quarter results. Yeah, it can't be third quarter. It's got to be fourth quarter. We can't have a calendar year. That's too hard. September quarter records for total company revenue, iPhone revenue, earnings per share. Services revenue reaches new to all-time high. All right, so the company posted quarterly revenue of 102.5 billion, up 8% year over year. Wow, they're finally growing revenues again. Good for them. For a while, they weren't really growing revenues that much. Diluted earnings per share was 1.85, up 13% year over year. Today, Apple's very proud to report a September quarter revenue record of 102.5 billion. All right. In September, we were thrilled to launch our next iPhone lineup, the iPhone 17. They're going to get to the iPhone 155 one day. The iPhone 10,000. We're all going to be freaking cyborgs when they launch the iPhone 10,000. Yes, this is so awesome. In addition, we launched the fantastic AirPods Pro 3 and the all-new Apple Watch lineup. I am not a fan of the Apple Watch. The only Apple product I like is the iPhone. Everything else is poop. When combined with the recent announced MacBook Pro and with the powerhouse M5 chip, we are excited to be sharing our most extraordinary lineup of products as we head into the holiday season. All right. So basically shilling the gains. Apple's board of directors has declared a cash dividend. Oh, it's a dividend stock, bro. Time to buy it. So if we look at their consolidated financial statements, let's look at their growth in products versus their growth in services. So products year over year grew 5%, so that's okay. Their services grew 15%. So most of their revenue growth by percentage, at least, came from services. And services is very profitable. Their service margin is 75%. So they're growing services pretty rapidly, and that's a very high profit margin part of their business. But even their products, they make a lot of profit. I mean, and that's common sense too, because Apple products are freaking insanely expensive. They have 30%, they get 36% gross margin on their products and 75% gross margin on their services. Pretty good. All right. Total gross margin, pretty solid growth. R&D up about $1 billion year over year. And selling and admin expenses up about $500 million. Nothing crazy. Operating income up almost $3 billion. That's pretty good. And net income up massively. But the big difference was because, so you see they have earnings per share of 1.85 in this quarter. And then last year they had earnings per share of 0.97. They had some kind of they had a pretty big tax hit from a provision for income taxes back last year. So that is a big part of their earnings per share growth. It's a huge part of it. Okay. Their provision for income taxes last year was 14.8 million or billion. Wait a minute. Am I crazy? Yeah, 14.8 billion. And this year was only 5.3 billion. So that's a big part of why their EPS is absolutely exploding. But even without that, they're still growing operating profits, operating income. So not a worrying thing there. Obviously, they're buying back shares. We can see share count drop pretty significantly. Sales by region. So America, it's up about, 7-8%. Pretty solid growth in Europe. Look at that. European sales growth is 15%. Greater China sales down, shocker. And then in Japan, up 11%. So that pretty impressive growth in Europe. The Europeans are loving their iPhones. Let's look at sales by category. iPhones is up pretty good, up to 49 billion. Macs are up to 8.7 billion from 7.7 billion. iPads basically flat. Wearables basically flat, and services. So all the growth in revenue came from iPhones, Macs, and services. iPad and wearables are kind of lame. And dragging butt. All right, so here's their balance sheet. I'm sure it's awful. Let's see, debt. They've actually paid off a pretty good chunk of debt. So they had 85 billion of long-term debt, and it dropped to 78 billion. Did that go to current debt? Some of that was short-term, or it basically when you have long-term debt on your balance sheet, when it's due in a year or less than a year, you move it to the short-term part of the balance sheet. So they paid off some debt, but that drop is partially because they moved some of their long-term debt to the short-term debt account on their balance sheet. But they still paid some off. And of course, they're buying back stock. Shocker. Didn't know that. Okay. Operating cash flow in the last 12 months is actually down a little bit year over year. But a big chunk of that is just changes in balance sheet accounts, mostly liability accounts. Let's see. What do? They spent $90.7 billion buying back stock. $90.7 billion buying back stock. And $15.4 billion paying dividends over the last 12 months. That's pretty crazy. So pretty solid for Apple. That's a big improvement because they were gulping the schlong for a while. Yeah, it's up 2.88% in the aftermarket. $4 trillion company. It's been eclipsed by NVIDIA. Poor Apple. Yeah, you can see like their revenue definitely for a while, it was just basically flat. But they've kind of reaccelerated revenue growth. So that's good. All right. So that's Apple, my crapple. Let's check out Mastercard. Mastercard. Oh, it's down 0.66%. It's cooked. It's cooked. It's cooked. All right, Mastercard. Third quarter net income of $3.9 billion. Third quarter adjusted net income of $4 billion. Third quarter net revenue of $8.6 billion, increase of 17%. And third quarter gross dollar volume up 9%. So they're squeezing more revenue out of all those transactions. Thank you, vendors. Mastercard delivered another strong quarter with net revenue growth of 17%, very solid, driven by healthy consumer and business spending and continued robust performance of our differentiated services. Yeah, oh yeah, people are addicted to spending. Shocker. This is America. This quarter, those value-added services and solutions delivered net revenue growth of 25%. And we launched the Mastercard Commerce Media Network, our new cyber threat intelligence solutions for payments and expanded agentic commercial capabilities. Is that AI? All industry-shaping innovations aimed at driving consumer value and unlocking new buyer centers. Yep. Spend, 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 America. So net revenue, like we said, a very solid growth of 17%. Operating expenses only grew 5%. That's pretty good. So they definitely are controlling their expenses very well. And their operating income's up 26%. Very solid growth. Operating margin, 58.8%. Very good. Very good, sir. Net income is up 20%, and diluted earnings per share is up 4.34%. Let's see. So gross dollar volume growth of 9%, cross-border volume growth of 15%, and switch transactions growth of 10%. All right, let's see. So their operating expenses increased 5%, primarily due to higher general and admin expenses, which included the impact of a restructuring charge, partially offset by lower litigation provisions. We getting sued here? Okay, so very solid quarter for Mastercard. They have any guides? What are we guiding for, bro? Let's see. See if we can find it. Did I miss it? Where's the guide, bro? Guide. Fourth. Nothing. Lame. Okay, let's look at. Let's see. Yeah, I mean, pretty good. I mean, nothing, basically good earnings. I mean, all these corporations are still printing profits like never before. When does it end? I don't freaking know. I guess it'll just grow forever into infinity, but very impressive results from some of the top three holdings in the index, but I don't own them individually, so I guess I'm a moron. Okay. All right, let's do some member-only comments, and then we're going to move on to the more exciting earnings of MicroStrategy. Amazon, my Panazon, is up nearly 13%. Yes, they did very well. Alan Carlson complaining again. Alan, okay, you send me $5, I'll respond to your email. I gave you a verbal response. Are you happy buying a product giving these monopolistic company the ability to do whatever they want? I mean, I'm not really a consumer, dude. I thought, hold on. Sorry, I was reading a text. Somebody started a text with I thought. Look, bro, you cannot claim that I am a consumerist. Okay? I'm not a consumerist. Yeah, I consume. Obviously, I consume. Look at my jacked muscles. Obviously, I eat a lot of protein. But guess what? I don't just blow my money just to blow money. I'm a very frugal person. But sometimes I got to buy things, okay? So, yeah, I guess I'm feeding the monopoly, bro. But you know what really feeds the monopoly? The government. They allow it to exist. Somebody's comparing Amazon to VT. Yeah, Amazon went up more than VT. Amazon's amazing, bro. You people kill me, man. Meanwhile, underperforming. Yes, yes. Every stock in the world is outperforming VT. Just like people try to own me, and it's just like blatant nonsense. It's like, if you're gonna own me, Say a fact, but like facts don't matter. It doesn't matter what the facts are. All that matters is what the morons believe to be true. Duh! Instead, you could have just bought their stocks when they were undervalued. Just buy when they're undervalued, bro. Just buy them when they're undervalued. It's easy, bro. But paper ETFs, worthless shares. Oh, my God. You are the master troll. You really are. He sold his Alibaba at a loss. I didn't sell the absolute bottom. Tells you he is not a real capitalist. Well, I have my disagreements with capitalism, okay? I'm not like a fluffer of free market capitalism. So, yes, I'm definitely not a pure capitalist. That's true. I miss Gil. He had great arguments. Oh, yeah, very well thought out arguments. Oh, Jeremy made more money this year after losing millions. That means he's smart. And lucky for you, strongman, you won't be able to profit from that share buyback. Fun stuff. Buy PT, right? Man, we got a new Gil in the house here. Hurry up, Paul. Just posted a video. Yeah, go watch Paul, loser.
Me and my wife's kids.
Valuation matters, little man. Personal finance. Real. Oh, we got our free member here. MSTR, Michael Saylor and Ape Father, our friends. Oh, God. The dynamic duo. Watch MicroStrategy start buying AMC. If Amazon went up because people spend all their money, what about Klarna? Well, Amazon, it seems like AWS was like the big driver there. I mean, that's the lion's share of their profits, and it grew pretty significantly. Nothing to do with being a consumer. You're stupid ETF dummy. Alan. Oh, you want to get, Alan, give me $500, bro. Thanks. It's a fact. Man, you're really triggered by VT. You really, like, VT drives you insane. It makes you angry. You want to know why it makes you angry? Because I can literally just buy it and do nothing and beat you over time. Okay? And I focus on real things like a job or a skill.
I did my research. I spent every weekend for the past 10 years buying stocks, and I underperformed the market. but I did the DD.
How about you get a skill in a side business, clown? Will you ever get ripped to intimidate the grifters? Trust me, I am way stronger than them. You think Graham is like 5'3". He's a turbo manlet. And Andre Geeky can't be that tall. The only person taller than me, I think, is Jeremy Lefebvre, but I am way stronger than that soy boy. He lives off tattooed chef and oat milk. Did y'all not see that video of me benching like a total Giga Chad?
Oh, that was Photoshopped. That was AI. Yeah.
Of course you're not a free market guy. You buy a product that destroys free market. Man, you're giving Gil a run for his money. I made ChatGPT give a description of you. She said great things about you. Oh, yeah. ChatGPT is just, it's an AI, bro. All ChatGPT does is just rip off other things on the internet. So if you're asking ChatGPT for like relationship advice, it's literally taking what people said from Reddit. Okay, it's not real. You're not talking to a person, people. You're talking to a skimming machine, basically. All index ETFs ETFs are clownish. Instead of buying the index, just buy all the stocks individually in the index. That's how true Chads operate. Congratulations, destroying America and still being broke. Yeah, I'm the one destroying America. Alan says, if you became a CPA, it truly shows anyone can. Man, you guys are being real nice today. I'm having a good time. All right, so that's the three stocks. We're going to go on to the more exciting ones. I mean, these, like, they're the largest stocks in the index, whatever. I like talking about the clown stocks like MicroStrategy and Coinbase. So stick around. We're going to go live very shortly after I go pee-pee. And stay tuned. Like, subscribe. Consider joining as a member to support the channel. Consider liking my Facebook page. It's SMPF. Also, consider following my X account. It's Strongman Personal Finance. You need to subscribe and like all of my different accounts in case I get deleted on YouTube so you can still access me and so I can still grift you. Do you understand? Like, follow my X account and all my other accounts. And finally, consider booking a free 30-minute tax consultation with me. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free, a free tax consultation. I give you upfront fixed quotes for your tax preparation, and I'll do your taxes like a boss.